Thanks for joining us again on the show. The second half, we're turning our attention to the Adoption Readiness Working Group that are set up by the Financial Reporting Council of Nigeria. It's come up with a roadmap for the adoption of IFRS S1 and S2 in Nigeria, which was launched by Chairman of ISSB, Mr. Emmanuel Faber. Under the roadmap, there are 4 adoption phases, which are early adopters for the accounting period ending on or before December 31st, 2023, voluntary adopters for the accounting period ending on or before December 2026. We have mandatory adopters for accounting period beginning on or after 1st January, among others. To talk more on this and more, I have 2 gentlemen with me in the studio. First is the Coordinating Director, Directorates of Accounting Standards and Sustainability Reporting, Dr. Ihaye Ayahara. Dr. Ayara, thank you for joining us on the program. Also joining me is Chairman, Nigeria Integrated Reporting Committee and immediate past President, Institute of Chartered Accountants of Nigeria, Dr. Innocent Okosa. Gentlemen, thank you so much for joining us on the program. Well, I'd like us to quickly begin with perhaps the 4 adoption phases that we just talked about. Let us understand briefly what it means.
Okay, so the Adoption Readiness Working Group set up by FRC came up with the roadmap. And then in the roadmap, they have those 4 phases that you've talked about. The companies are to key into any of those phases, but we have passed the early adopters phase. Okay. So in the early adopters phase, we had 4 companies that made the early adoption phase. That's MTN, Fidelity, Access Bank, and Seplat. So we've passed that phase. So the phase at which we are now is the voluntary phase. And in the voluntary phase that will run between now and 2027, before the mandatory phase will kick in. Okay. Yeah, and the other one is the public sector, which has not been worked out, so to say. So we will advise companies now to join the voluntary phase, because in the voluntary phase, they will have opportunity to learn.
Precisely, what is the rationale behind this phased approach? Right.
You know, the IFRS S1, S2, just like when we adopted the International Financial Reporting Standard, will require a kind of preparation on the part of the adopting entities. Okay. So by phasing it, it creates opportunities for companies to key into each of those phases and be able to do that correctly. All right. and implement properly, so to say.
Dr. Hiayi, do you think this roadmap will impact Nigerian businesses, particularly those that are not yet prepared for the adoption of IFRS S1 and S2?
Yeah, thanks so much, and thanks for having us. Like Dr. Okosa said, we need to give deeper context into the phases. It's like when you are keen to join a train. The Adoption Readiness Group had the mindset of either big bang, okay, or phase-by-phase approach. And you know, when you do a big bang, there's usually going to be stampede and rush. So in the wisdom of the group, we said, let those who have the competencies start implementing. And that's where we got the early adopters. Okay. And the other group, like he mentioned, the voluntary adopters, are part of the public interest entities. Yeah, here you said whether it will impact on the businesses and economy. Yes. Absolutely. Because we are doing business in a global village. And this is what is being driven globally, where people are expected to give corporate reports that will enhance the understanding of the activities as it relates to either the environment, social, or governance. So businesses across the global north are demanding that entities, especially public interest entities, report in line with the sustainability. Absolutely. It will impact, even in the strategic, even in the investment, even in all they are doing. And that's why, for Financial Reporting Council, we are looking at it as corporate behavioral change. Reporting is at the end. If you don't change, you wouldn't report what you're doing.
Indeed.
Absolutely, it has a great impact on businesses.
What kind of support system do you think will be needed for a smooth transition in this regard?
Yeah, the major thing for me is the mindset.
Okay.
Because most times when you talk about change, people resist without knowing the benefit. So if we get the mindset correct, the next thing I think we should do is the skill set. The skill set will also give people to develop the capacity to do what they ought to do. And the third one, to be very precise, is infrastructure, technology, because the reporting is driven by data. And for you to get appropriate and correct data, you need such infrastructure. So for me, three, mindset, skill set, and infrastructure.
Mindset, skill set, infrastructure. What's the status for us right now in the industry?
Yeah, so one of the things that has happened is that the Nigeria Integrated Reporting Committee and the Financial Reporting Council has signed an MOU.
Okay.
Through which the Nigerian Integrated Reporting Committee will support the Financial Reporting Council in advocacy, capacity building, and all that. And already things have happened. Okay. Like you said, capacity building is one of the things that you require to be able to implement correctly. The NRC and FRC has organized sector-specific capacity building. They've covered the financial services sector. They've also covered the telecom and then oil and gas. And a lot of activities, capacity building have been planned against next year. Okay. There will be manufacturing, even the professional accountancy bodies, the audit industry, they are all going to be visited, because in one way or the other, these are people that facilitate the adoption. So capacity building is what these businesses and entities require to be able to have a smooth implementation of the standard.
Gentlemen, I would like us to explore, if we can, the benefits of the IFRS S1 and 2 further. How would these, for instance, ensure some level of transparency and accountability in sustainability reporting? And how do you think that, what do you consider the potential consequences if we don't adopt these standards?
Yeah, thanks so much. You have even, in your question, you have even brought out the critical issues, transparency and accountability. In financial reporting, we have what we call fundamental qualitative characteristics. And one of them is faithful representation. Okay. So what we are saying here is, can you have credible, comprehensive report of your activities as they affect the environment? Most times we focus on only profit. When you are looking at profitability, you are beclouded. You don't look at issues on people and planet. Meanwhile, your profitability leads to either degradation or a lot of environmental hazards. And we are now saying, if you are able to do a comprehensive report, you will be fully representing your activities. And the market, especially capital market, will see holistically what your activities are, and that will make people to either invest or run away. Either reputation, the market, and all of them. So for me, it has a great impact on it. And the transparency, if, for instance, your activities cause erosion, and you don't report it, you're only reporting how much profit you have made, you will see that you are not transparent. Absolutely. You are not accountable. So that's why we are driving this.
Well, that brings us to the issue of implementation and compliance, because it's one thing to have all these fine methods and systems. How do you ensure compliance to this phased approach? Are there consequences in cases of infraction?
Okay, so first of all, I think the objective or the aim currently now is to onboard the entities. onboarding the entities, and that's also one of the things I talked about, the voluntary phase. You know, voluntary adoption is you voluntarily opt to come on board at that point in time. It is not that compulsorily you are required to come on board. And so it has inbuilt in it a learning phase whereby sanctions are not the objective. Yeah. So, but come on board, learn before the mandatory phase kicks in. You know, and the mandatory phase, like I said, will kick in from 2028. And that's when we begin to talk about compliance, enforcement, sanction. Yeah. But if we can get as many people as possible to come on board now, we would have achieved the objective.
What's the adoption level like?
The adoption level.
No, that's where I will step in, because we have what we call a readiness test.
Okay.
And there are 3 major phases in the readiness test.
Okay.
We require entities who want to go to submit certain documents. And like he mentioned, we've had some considerable responses. Okay. Again, voluntary. People, especially in this climate, would wait to what I call lastminute.com. But voluntary, we have, as we speak, from the records, I think we have about 10 that have submitted the mandatory documents for FRC to assess their readiness to implement. However, I foresee as the year goes on, some are doing, let us watch what is happening, some are doing this. Permit me also to harp on the sanction. Especially when FRC is mentioned, a lot of people have the mindset of sanction.
Absolutely.
No, this time around, like he said, our major objective is to have positive corporate behavioral change. A lot of things corporate are doing, I mean, negates why they should be in existence. And like we are talking about sustainability, you know, their action today impact negatively for tomorrow's living. So our message, our narrative is, can they please change and report appropriately? So we are envisaging a greater turnout as the year goes on. And our message to them also, don't wait till the last phase. And the last phase, which is mandatory, will attract sanction. About 4 or 5 years, what do you call it, moratorium, will give people opportunity to learn now, make mistake, and get better. Rather than waiting for the last phase when, of course, if it becomes mandatory, if you make any mistake, of course, the regulator will...
We'll bring the sledgehammer.
Thank you.
Is there any special support for small and medium-sized companies because of the limitation they have in the area of resources?
Yeah, the NRC, FRC MOU has inbuilt in it some support for SMEs. And in the coming years, we're going to roll out clarification in that direction. Yeah. Can I talk a little bit about the advantages?
Please do.
Yeah. So, you know, this is a global thing that's happening, as Dr. Nyara has said. And the global north is, you know, climate related issues are now a major concern. So IFRS S1, S2 is telling corporations, companies, entities to come on board. Even our government is also thinking in that direction. There's a transition to clean energy. As we all know, you have the Climate Change Act that has been, you have the National Council on Climate. So all these things are global effort towards addressing this issue of IFRS S1, S2 that is that's trying to address. So it is better for companies to come on board now and don't wait till the last minute, because eventually, and what we have discovered is that financial reporting information is no longer enough for investors. Investors are concerned with climate-related risks that every company is facing. And like he said, at the level of strategy, the business model is going to change. And there is a need for companies to begin to think in that direction. Investors want companies to tell us, how are you factoring this into what you do and into your operation? And those things help the information that they need to make good investment decisions. So it's not just financial information anymore, but sustainability information is required for investors to make a more informed decision.
You know, on a light mode, they say global efforts climate issue is a global effort until Trump becomes president. But you have been talking about the benefits and all of that. What's the cost implication as we begin to round up, associated with implementing the S1 and S2?
Yeah, thanks so much. On the lighter mood, yeah, I don't see Trump actually stopping anything because it's really a global movement. And you have the ISCO, you have the G20, you have all of them supporting the movement. And it's really driving investment globally. That's that. Of course, any new thing has its own cost implication. Indeed. The major cost implication is creating the infrastructure because most data will be driven by technology. You need to put the infrastructure, digitalization that will capture to the minutest level the metrics that will be required to report. And again, like we are saying, capacity building is really cost involving. Yeah. But the good thing about it is that the relationship between NIRC and FRC is making it look much easier because most of the capacity we are building is free. We don't want to have excuses where we don't get it right. So that's why FRC stepped out and looked at a technical partner, NIRC, to actually come together to see how we can train as many as possible we can, and that will reduce the cost implication. So for me, I think it's a win-win. Again, let's look at SMEs supply a lot of raw materials to the global north. And their decision, for instance, Europe, have a directive. So if you don't comply with that directive, you are likely going to be yanked off of their system because they don't want to run foul and pay penalty in their area. So it's something, a gamut of the whole thing. We need to come together and see the best approach to achieve.
Doctor, you are big on the benefits. I thought you were going to explore.
I thought about the cost implications.
I thought you were going to explore what it means for businesses to align themselves with international standard and how it can help foreign direct investment.
Yes.
Is that viable?
Yeah. So exactly. That's exactly what when I talked about information and what investors, because when you provide information, so investors need information to make investment decisions. And capital will always flow to those companies that are transparent in their reporting, because then investors will be able to make a more informed decision. When we talk about cost of capital, the cost of capital is because of the risk that an investor prices into the investment he makes in a company. And why does it make the price such cost? Is because he lacks the information to be able to say, this is the state. In the capital market, we talk about information asymmetry. That's the disparity between the information that the managers of the business know and that of the investor. So the managers always know more information than the investors. And this sustainability is what enables us to bridge this information.
We have completely run out of time.
Yes.
We have to go. Perhaps we'll continue this conversation subsequently. Dr. Haye Ayahara and Dr. Innocent, of course, it's been a wonderful time having this conversation with you.
Thank you.
It's a pleasure. Thanks so much.
Thank you very much.
Thank you so much for coming.
Thank you.